So, hello everyone. So, in this video, what I'm going to be doing is I'm actually going to do a practice return here in TaxSlayer so that you all can see how to actually operate Practice Lab, which is going to mirror the software that we are actually going to use. So, this should help you get familiar with the process of how to use TaxSlayer. And the resource that I'm going to be using for this is I was able to locate online the exam from 2019. And of course, now no one is actually going to be testing on this. And so it's perfectly okay for me to show how I would do this scenario here if I was doing it in this year in 2021. Well, with regard to 2021 returns, I'm of course doing this in 2022. And there's going to be some differences here, and I'll mention them when I get there, and some of the amounts will be different than the answers would be back when we did these. Yeah, because this is the ones that I did when I volunteered the first year. Yeah, back when we did these previously, they're going to be slightly different, but it's going to still give you a sense of how TaxSlayer actually works and how it goes to actually fill out a return. And so the first thing that you always want to do when coming into a scenario like this, and again, this mirrors the actual interview that you would have with the taxpayer, is to actually go ahead and review the notes that you took from your interview when you did that with the taxpayer. And so from the notes here that we have, we can see that we're preparing a return for Jennifer Morrison, and that Jennifer was divorced from her husband in 2014 and has not remarried. We can see that Jennifer provided the entire cost of maintaining the household and over half of the support for her children, Carla and Ollie. So notice here already we're 2 bullets in the interview. We see that she's divorced, but that she maintains all of the costs for her household with 2 children living in it. It's probably a decent indication here that she may qualify for head of household status. We also see here from the interview notes that Jennifer claimed the earned income credit for Ollie and Carla in 2016, but they lived with their father for 8 months that year. Jennifer received a letter from the Internal Revenue Service disallowing the EIC for tax years 2017 and 2018. It's important to note here we are in tax year 2019 in this scenario here. So additionally, Jennifer is a full-time kindergarten teacher, and she spent $350 to buy books and supplies for her class. So we got the educator expenses that we talked about in the last lecture there. And we see that Ollie attended daycare while Jennifer worked. And so there we see already an indication we may have the child and dependent care credit. And so you see here already we're only a couple bullets in the interview, and we know a lot about the client already. And now for the next bullet, in August 2019, Jennifer's daughter Carla enrolled in college to pursue a bachelor's degree. She had no previous post-secondary education. The reason why that there is important is it's going to help us tell whether or not to have her qualify for the American Opportunity or the Lifetime Learning Credit. And Yuma College is a qualified institution. Carla does not have a felony drug conviction. Again, that matters for the education credits. And Jennifer brought a Form 1098-T and an account statement from the college. Carla's purchases at the college bookstore were for course-related materials. We, of course, know that's important for calculating things like whether scholarship is going to be taxable or not, and how much you can claim for those credits up there. And the terms of Carla's scholarship require that he used to be paid for tuition, so that's another helpful note there. And we also note that Jennifer received a Form 1099-C for canceled credit card debt. Using the insolvency determination worksheet in publication 4012, Jennifer determined the value of her assets exceeded her liabilities and that she was solvent at the time the credit card debt was canceled. And again, that's important there because if she is insolvent, as we talked about in one of our earlier lectures, we cannot prepare that return. And then we see here, lastly, Jennifer purchased her own health insurance through the marketplace, and she received Form 1095-A. Carly and Ollie were on their father's health insurance plan through his employer all year, so we are going to have to enter that 1095-A into the software. You see here, as we always require, we have the social security cards for all of the individuals who are going to be listed on this tax return. And so another important thing to scan here, and I cannot hammer this one home enough, is to really pay attention to form 13614-C. And so this is going to give you really all of the information that you need from a taxpayer. And I know we've touched on this in some earlier lectures, but this is going to give you one that is actually filled out. You can see here we have Jennifer's name, we have a phone number here, and then we have the address here, the city, the state, the zip code, date of birth, job title. Those life factors here that we learned in the last lecture can change your standard deduction amounts, which is why those are very important there. And here tells us if anyone can claim them as a dependent. See here, marital status. We see, yes, that Jennifer was divorced. The date of the divorce decree was July 23rd, 2014. Again, remember that date becomes important if there is something like alimony involved in the divorce. And we see here some specific details related to individuals who could potentially be claimed as dependents, and this section here needs to be completed by a certified volunteer preparer. I'm not going to fill that out here because I cannot edit this, but this always needs to be completed by the preparer every single time a return is done. But I'll still show you some of the process you would go through to do that. And here on this page now, as we just continue scanning this document before we start the return, we are looking at first, what types of income does our client have here? We see that they have wages from their only job this year, which was as a kindergarten teacher. And we see additionally that there were scholarships that were received by this taxpayer, or in this case for one of their dependents. And we see that there weren't any other forms of income, except here at the very bottom where it says other income. It talks about that form 1099-C, which, if we go back to the interview here, is for the canceled credit card debt. So again, only three portions of income here. We have the wages and salary, we have the scholarships, and we have the cancellation of debt here at the bottom. So nothing too crazy is going on here with the income in this section, so that's always good. And now, moving on to the next portion of the sheet, we get to the expenses area. So here in the expenses area, we see that they had contributions to a retirement account, which they've checked as other there. And we see that college or post-secondary educational expenses for yourself, your spouse, or your dependents, form 1098-T, which we have attached to this form here. And we see, as we touched on already within the interview, we have child or dependent care expenses, and then we see the eligible educator supplies that we talked about earlier that we learned from the interview. And additionally here it talks about life events, and as we talked about right here already in the income section, that there was credit card debt canceled and that the earned income credit was disallowed in a prior year. And we saw that she, in fact, did purchase healthcare through the marketplace, and as you're going to see, we do have Form 1095-A. And here at the very end, we're going to have some other factors that are going to be important for completing the return. So for example, here we have it checked that she does want to contribute to the presidential election campaign fund and that she wants to direct deposit her refund in this case. So you see here, there's other information that was entered by our client here. So as you see here, we get to Jennifer's W-2, and this is another thing that I like to do is I like to scan when you're starting a return and make sure that all of the documents that you have are actually what you need and that you are not missing anything. That is extremely important for you so that you don't get most of the way through a return and realize that you in fact can actually not fill it out, because that is not good if that occurs later. So you see here, we have the form for the cancellation of debt as well. And we have the 1098-T here for Carla, her daughter, and then we have the 1095-A here as well from the marketplace. In all of these forms, they may change a little since 2019, but for the most part, they're pretty similar still. And then this here, this isn't an official IRS form here, but this is just something to basically show us the amount of education expenses that Carla paid. But again, as we're going to see, not all of these are going to count. Yeah, and so here is basically a statement from the daycare place that Jennifer sent Ollie to, and so that gives us the amount that was paid for that as well. That's banking information. We'll see that for when we file the return at the very end. Okay, and so now that we are familiar with the situation of our client, it's time to actually go into TaxSlayer and begin this return. So the first thing we have to do is you have to come in here. Once you log in to the TaxSlayer Practice Lab, you have to select that you want to start a new tax return. And so now what I'm going to have to do is I'm going to have to come back over here and I'm going to enter Jennifer's social security number because that is the person that we are doing this for. So I'm just going to put this in here, 601-00 I'll just put some random numbers in here at the end. 1, 2, 3, 4. So again here, 601-00 1, 2, 3, 4. And we're just going to start here with the basic profile. I wouldn't really mess around with any of these other ones. Just go through basic one and let the software do the work for you. So we're actually going to go ahead and start the return now. And it's processing. We wait for it. We're making progress. Okay. No, I do not want to update this password. And so here it gives you a message that some stuff is changing. And that's something we're going to have to keep in mind, especially with COVID. Tax rules have been changing a lot recently. And so it's important that we stay up to date on what is evolving. And so the first thing here we're going to start with is what is Jennifer's filing status? And so what we're going to do is we're going to come back here to the handy dandy publication 4012. And so we are going to go ahead and come to page 3 here, the table of contents. And what we're going to do is we are going to go ahead and look for the information on determining her filing status. And so I'm just going to click on the link to B8 here to go to the decision tree. And so here we go. We're going to go ahead and get started with this. And so the first question in the decision tree with regard to filing status is, were you married on the last day of the year? So she was not. But again, we see here, we have 1 and 5 as footnotes here as exceptions. And so we're going to check the footnotes. It says, answer no to this question if on the last day of the year you were legally separated from your spouse under a divorce or separate maintenance decree. Answer no for individuals who have entered into a registered domestic partnership, civil union, or a similar relationship that is not called a marriage under state or foreign law. Answer yes, taxpayer is married regardless of where a spouse lives. That doesn't affect our answer at all, so we're still good. And then here it says you are considered unmarried for head of household purposes if your spouse was a non-resident alien at any time during the year. Well, we know that Jennifer is just not married at all, so again, the exception does not apply to us. Here, did your spouse die during the year? No, that did not occur. And so here we go. We're going to look at these now. We're at this part of the decision tree. It says, do all of the following apply? Your spouse died in 2019 or 2020 and you're not remarried before the end of 2021. No, her spouse did not die. And so now we come down here to this bottom part of the filing status decision tree. It asks us if both of the following apply. You paid more than 1/2 the cost of keeping up your home for the required period of time. There's an exception to that, so we're going to look at that. Include in the cost of the upkeep expenses such as rent, mortgage, interest, real estate taxes, insurance on the home, repairs, utility, food eaten in the home. And there it just gives us more details on what costs can be included in that. So that's nothing too crazy for us. And then the second part of this is a qualifying person. See who is a qualifying person to file head of household and lived with you in your home for more than 1/2 of the year. And so what we're going to do now, since we see that there, that's important, we're going to go ahead, come back to the table of contents, and now we are going to look for who is a qualifying person for head of household B10. It was just a page over. So now that we've used the table of contents to navigate here to the proper page to determine if a person qualifies you to file as head of household, we quickly run into this definition again of a qualifying child or a qualifying relative. So this is where it's important during your interview with the taxpayer that you fill out this section right here. And so we're just going to go ahead and do that now. So we'll come back here after we go ahead and do that, which again, you would do this step during the actual interview prior to actually starting the return. And so what we're going to do is we're going to come down here to the dependents section here in tab C. And again, it didn't work for me. I think it did that in the earlier lectures too. Probably should have remembered that. And so now we are going to scroll through it until we get to the correct area in order for us to determine whether or not they're going to be qualifying children or qualifying relatives or neither. So we're here. So we're in tab C here for dependents. And so what we're going to do though is we're going to skip a lot of these because they are children of divorced parents who live apart from each other. We see that here looking at their date of births. They were all born before the divorce was actually executed between Jennifer and her former spouse. No, I don't want to exit that. It's a good thing I clicked on that there. And so what you can look at here is in step 1, we say, did the child receive over half of his or her support from the parents who are divorced or legally separated under a decree of divorce or separate maintenance, or separated under a written separation agreement, or lived apart at all times during the last 6 months of the year? So that is clearly a yes, because it talked about in here, if you will remember in the interview notes, that Jennifer provided the entire cost of maintaining the household and over half the support for both of the children this year. So we go ahead here, gives us 4 potentially. Here, if you remarry, the support provided by your new spouse is true as provided by you. That does not apply to us. So we go to step 2. Here, was the child in the custody of one or both parents for more than half the year? Yes. So we're going to go to step 3. Did the custodial parent, the parent with whom the child lived with for the greater number of nights during the year, provide the taxpayer a signed written declaration releasing the claim to basically claim the child as a dependent? And so, no, we did not have any information within our interview or within the intake interview sheet that would indicate that that happened, and that if we remember back to where we go here to the bottom, that they did live with Jennifer the entire year and not her former spouse. And so we're here on step 4. It says, are either of the following statements are true? The taxpayer has a post 1984 and a pre-2009 decree or agreement that is applicable for the current tax year and states all 3 of the following. The non-custodial parent can claim the dependent without regard to any conditions, such as the payment of support, and that gives us a couple other areas here. But again, the divorce was executed in, if we go back here, I believe it was 2014. Yes, the divorce was executed in 2014, and so this does not apply here. And so we'll go check this exception again just to make sure nothing impacts it, nothing there impacts it. And so it says, in fact, that Table 3 does not apply. But this is where we were supposed to start because, again, it was of children of divorced or separated parents who live apart from each other. And so when this does not apply, what we do is we come back up here to where we look at all dependents to determine if we can claim them as a qualifying child or a qualifying relative. So the first question here asks, can you or your spouse, if filing jointly, be claimed as a dependent on an inherited taxpayer's return this year? So the answer to that is clearly no for Jennifer. And so we go to step 2, and she was not married at the end of the year, so we say no. We go to step 4, was the person a U.S. citizen, U.S. resident, alien, national of or a resident of Canada or Mexico? Yes, because if you'll remember during the interview, we talked about them being residents. And was the person your son, daughter, stepchild, child, eligible foster child, brother, sister, half brother, half sister, bunch of our relationships there? Yes, talked about already that they're Jennifer's children. So the next one is here in step 6, was the person under the age of 19 at the end of the year and younger than you or your spouse filing a joint return? Yes. For Ollie, we see that Ollie is under the age of 19, but that Carla at this time was in fact 19, because remember, this is in 2019 here. But Ollie is under the age of 19, Carla is not. But here's the second part of it, where we're determining whether or not they can be a qualifying child. They are under the age of 24 at the end of the year, a full-time student, and younger than you or your spouse. And so if we go back here and we look at Carla, it notes here that Carla is enrolled in college, and so Carla is in fact a student, and so Carla would meet the second standard here for step 6. And so since it was yes for both of them, we're going to go to step 7. It said, did the person live with you as a member of your household except for temporary absences for more than half the year? Yes. And so we do now is we come here to step 8, and it says, did the person provide more than half of his or her own support for the year? And we say no, because we remember that Jennifer paid the entire thing pretty much on her own. And so we say, is this person a qualifying child of any other taxpayer? No. We went through that chart already here in table 3, and we knew it. This is the only one that applied. And so yes, we say no, we can claim that person as a qualifying child or dependent. Apologize for misspeaking there. I've been recording too many of these videos today. And so, yeah. So we know if we come back here, if we were to go ahead and fill this in, which I, of course, can't do, we would fill this in as no, they're not a qualifying child or relative of anyone else. No, they did not provide more than half of their own support. Yes, they had less than $4,200 of income. I'll double check that. We come back here. Yeah, they definitely did. And did the taxpayer provide more than half of his or her own support? Yes, the taxpayer did provide more than half of his own support. And did the taxpayer pay more than half the cost to keep you up their home? Yes, and so both of them are going to meet the standard to be qualifying children. And so then we can come back here to where we were looking at who is a qualifying person for head of household. So it's qualifying child. They're both single, and so they are going to qualify Jennifer for head of household filing status. So I'm going to come back here into TaxSlayer, click head of household right here, and I'm just going to click continue. You see, here is where we're going to start entering in Jennifer's personal information. And so we're just going to start pulling this from the form here. We're going to say Jennifer Morrison. See, it's auto-completing because I've done this before. And so, yeah, we have Jennifer Morris there. And, yeah, we have the social that gets brought over. Jennifer's date of birth. Does it give us Jennifer's date of birth? Yes. 4/15/1975. 4/15/1975. So Jennifer is a teacher. So we know that she cannot be claimed as a dependent on someone else's return. Taxpayer was the over age of 18, full-time student. That doesn't apply. Taxpayer is blind. That does not apply. You see those check no on there, so we don't check it. The taxpayer is not deceased. The taxpayer does wish to contribute to the presidential election campaign fund, as you can see right here. So that's where we're getting that info from. Taxpayer served in a combat zone during the year. No, they were not non-resident alien for any part of the year. And this here is applicable to us now, but it was not at the time when this was actually issued, this exam. So we have no information on this. So we're going to leave that blank. They weren't affected by a natural disaster. Jennifer did not engage in crypto trading during the year. And she does not prefer written communication from the IRS in a language other than English. And the taxpayer does not prefer to receive written communications in an accessible format. And so none of those apply except the Presidential Election Campaign Fund, and so we can leave all of those blank. So now we're going to come here to the address portion. And so here we're just going to copy her mailing address that's listed here, which is 450 Sarasota Terrace, and that's going to just copy in here the zip code here, 97403, Eugene, Oregon, resident state as of 12/31, Eugene, Oregon. You see here we're just supposed to enter in our own city, state, and zip code there as well, so that's all good. So now we have to enter in a phone number, and I'm guessing this is going to flash my phone number here for the internet to see, but we'll see. And yes, that is correct, but we will still do something else. So there, we've entered a phone number. And so you see there, we filled out all of the basic information about Jennifer, filled out her name, social security number was brought over for us, date of birth, occupation. She does want to contribute to the election campaign fund. There's her address, there's the zip code, city, state, phone, and we move forward. And so dependents are qualifying persons. So this says now, it's basically asking us if there are any dependents or qualifying persons that we want to claim on the return. And so since we went through the chart already, we know that yes, in fact, we have 2 qualifying children. And so we're just going to go through them in order here. And so the first one here is Carla Davis. So we're going to start to import her stuff. Carla, it's going to want us to have her last name be Morrison. But we're going to have to change that here to Davis. And then Carla's birthday was July 15th of 2000. And now we're also going to need Carla's social here, which is right here. And this is why we always need the social of everyone listed on the return, because we do have to list their social as well. So we go 602, what was it? 00, very original, 1, 2, 3, 4. So no, we don't have to check that. Was this individual a U.S. citizen, U.S. national or resident alien? Yes, they were U.S. citizens. Relationship here for Carla, that is her daughter. Yes. All that apply. The person was over the age of 18 and a full-time student at an education institution. Yes. This person was disabled. So qualifying child is not your dependent. Check if you wish not claim them for earned income credit purposes. No. Dependent's not married. The dependent did not make over $4,300 of income. They don't qualify for a multiple support declaration. So you see here, we've entered in Carla's information here, and so we can move forward. So now we're going to go ahead and add another dependent or qualifying child, and this time now we're going to enter Ollie's information. So now Ollie Morrison, and see, we can keep that one that time when it filled that in for us because Ollie has the same last name here as Jennifer. And so here we go, date of birth, 3/12, what was the year again? 2010. 2010. And now we need Ollie's social as well, which is just 603 here. 603 00 1 2 3 4. And so we know that they were a citizen. Yes. Relationship. Son. Yes. And so check the person was over the age of 18 and a full-time student. Check the person was disabled. No. No. Okay, yeah, so none of those apply. So all we needed to do was enter the first name, the last name, the day of birth, social, spell out the relationship, and show that they are a citizen, a U.S. national, or a resident alien. And we just hit continue. And so since those are the only two people that we are going to be claiming as dependents or qualifying children, we're just going to go ahead and click continue again and move forward. So you see here, when we hit the dependents section here, and this is where I talk about really, don't fight TaxSlayer when you're filling these out. Just let it flow through and go in the order that it's telling you to, because it's going to make your life a lot easier. So for example here, it's offering to have me begin the death certificate section here. That really does not apply at all to this situation. There's no reason we need to fill it out, so I'm just going to click continue. I'm not going to try to go over here and pick a specific section that I want to go to right now. So we get through there. We see IRS identity protection pin. That doesn't apply. We didn't hear anything about that. I'm going to click continue again. And so now we're on to income. And so now we have something that I'm actually going to be able to work with. So we're going to come back here to the form. So we filled out all this. We filled out the dependents, the filing status, and some other basic information. It's time that we move on to the actual income section. And so here, I'm going to come to the income section of the intake and interview sheet, and I'm just going to work down this list right here. And so the first thing I have is the form W-2 with the wages or the salary. And there's only one job, so I'm expecting one W-2, which we know is the situation because we already checked this. And so we see here, this is Jennifer's W-2 for the year from her job. And so I'm just going to enter this into TaxSlayer now. So what I'm going to do, is you see here an income W-2 right there at the top, because it's the most common form, as it says. And as you can see here, this is a standard W-2, nothing special about it here, nothing marked off that's a special kind of W-2, so we're just going to leave that checked. The employee here, it's going to bring over their address information. It's important to make sure that this is all correct. And you can see there, it is in fact correct. And so the first thing that you're going to need to do when you start to fill out a W-2 is you're going to need to fill out the employer information. So here with the employer information now, we're just going to start by going 34600, and then we'll just finish it off with the classic 1234 to finish that. In the employee's social, we don't need that right now, even though it shows up here in the W-2. And so the employer name, this filled in incorrect stuff here. So this is Gilmer Elementary School. Is it at 2250 Delta Avenue? Now we'll just make this 97403 be consistent. Okay, and so you see there, I filled in the employer information now that we need, and so I'm ready to move on to actually entering the amounts from the form. And so we're going to start here on the top here with the wages, and so I'm going to go ahead and enter those, $41,000 here in the wages, federal income tax withheld, $2,200. So you see here it auto-populated some stuff, but what auto-populated was actually not correct. And so I have to go in here and change it. And so this is why it's important you're always verifying what the software is entering correctly, because our Social Security and our Medicare wages were actually both $43,000. And so now that that's been entered, I'm going to go and I'm going to verify that the Social Security tax withheld and the Medicare tax withheld is correct. And 2,666, I believe that's correct. It is correct. And then we see that the Medicare tax withheld, it's off by 50 cents. I guess I can change it, but it wouldn't be a big deal if it was off by that much. But I'll just change it for sake of completeness. See here, no Social Security tips, no allocated tips, so we can leave 7-8 blank here. 9, there was no IRS verification code, there's no control number here, no dependent care benefits, no non-qualified plans, so 10 and 11 could be blank also. And then 12A here, we see that we do have something in the box and we do have a box code. And so that's going to send us here to publication 4012. And what I'm going to do here is I'm just going to search for box 12 codes. And I'm going to go down here to the W-2. It says elective deferrals under a Section 403B salary reduction agreement. So here it doesn't say anything about how that's actually going to change my return, but it's something I'll keep in mind later, and I'll make sure that I enter it here in TaxSlayer. So you see here E for $2,000. And you can leave all this blank in here because, again, it was blank on the W-2. We see here in 13, the retirement plan box is checked, so we check that. Come down here, 14, this is all blank. 15 here now. We go ahead and we enter our state here, Oregon. And we say that the employer's state ID number is going to just be the same thing as it was up there. Yeah, and it brought that over. State wages, $41,000. State income tax paid was $1,800. And so now we have entered this W-2 in there already. And so I'm just going to go ahead, do a quick run through, make sure it all looks correct and that the amounts are correct. 4,100, 4,300, 4,300. Yeah, those are all correct. 2,200, 2,666, 6.4. Yeah, 2,000 retirement plan. 41,000, 1,800. Yep, everything looks good. And so we are just going to continue and have it entered. You're going to see here on the side, TaxSlayer is going to go ahead and update with our AGI, which at this point is just equal to our W-2 because that is the only thing that we have put in there. And so now we're going to move on to the next form of income. So we did that already, and that's going to be the scholarships forms W-2 1098-T. I'm actually going to save that, and the reason I'm going to save it is because I want to do that at the same time that I do the expenses, because those go together nicely. And so I'm going to enter now form 1099-C. So when I come here, form 1099-C, I can see it's here. It's all correct. It's got what I need. So now I have to go ahead and find it. And so this one could be a tricky one to find because it's down here in the less common forms of income. And so I'm going to look here for cancellation of debt. You see here, 1099-C. Going to get that. Creditor's name here, it is Prairie Bank. Creditor's federal identification number is 306001234. And the amount of debt that was canceled here is $1,100. And so, pretty simple there. That's all you got to do for that one. So now I just click continue, and boom, our canceled debt has been entered into TaxSlayer. So now we just keep hitting continue, have those common forms of income, and we're back to the main income screen. So you notice here too, our AGI went up, and that's because we entered the cancellation of debt. So now you see we have entered this under income, and we have entered this down here, which was of course again the cancellation of debt. So you see the only other form of income that we have here is some scholarships. And so we know here, though, because we've talked about this in our lecture, that this scholarship here for $4,200 is not going to be taxable because we paid $7,200 in expenses, so we are not going to need to enter that into income. Instead, that's going to factor into the expense portion, which is why I talked about I wanted to save it till later. So don't think we're just ignoring that. It's going to come up again later, but it's just not going to fall under the income section here. And so now, those were really our only two big pieces of income. So we can just go ahead, come down here at the bottom, click continue, and we are moving on to the deductions area, which this follows, you'll notice, a similar format to what we followed in the slides. And so if we come back here to their expenses, the first thing that we see marked is contributions to a retirement account. But again, notice here in the box codes here for E, and this is why it's important that you read them. It was called out here, and it was called out on the W-2, and so TaxSlayer is going to go ahead and do that contribution information for us. So we do not have to worry about that right now. And so what we're going to go straight to then is the college or post-secondary educational expenses for, in this case, one of Jennifer's dependents. So we're going to come down here, and we are going to do first is we are actually going to come here, and we are just going to go ahead and head over to tab J, which all of us will become very familiar with. And we are going to come here to the education expenses to actually determine what we can add to them. So if we come back here to the education expenses that we got from the school, we saw that we had tuition was paid for, there was a meal plan, a parking pass, and charges to the student account from the bookstore, which we learned from the interview were all for school. And so coming here to publication 4012, we can see that the tuition will count as an education expense. So that $7,200 there will definitely count. The meal plan will not count because that's a part of room and board. And the parking pass would count as a travel expense, and so that would not be included. And then the cost of the campus bookstore would be included because those, in fact, were all used on school items. And so we're going to go ahead and do then, because we know that this is a credit, because we're going to be entering an education credit here, is that we are going to go ahead and find the education credit right here. It says 1098-T. I'll go back. I clicked that real quick. So credits here, I'm in the credits tab. You see here is a big list of credits, and a little bit down here you'll see form 1098-T. I click begin. And so it gives us an option here to select an eligible student. So I can select any of Carla, Ollie, or Jennifer Morrison. And so it's pre-populating with Carla, and the reason it's doing that is because I checked that she was a student when I originally entered her information. And so now we're just going to go ahead and take the information on this right here and on the 1098-T, and we're going to bring that on to TaxSlayer. And so what we're going to do here is we're going to first figure out the American Opportunity credit. And so the reason why we know she's going to qualify for the American Opportunity credit is because we know that she has not already completed the first 4 years of post-secondary education before 2021, because I mentioned here during the interview that where was it? Yeah, she had no previous post-secondary education experience, and also she doesn't have a felony drug conviction, because that does play into this here, and you'll see all of these other standards. Yeah, see felony drug conviction right there. See all of these other standards. She meets them all, and so we know we're going to put in for the American Opportunity credit. And so the qualified expenses here is going to be, I'm going to come down here to add up the expenses. We're going to have $7,200 plus $650, which should give us $7,850 in expenses. And then what we're going to do is we're going to subtract from that $7,850 the $4,200 in scholarships and grants received, and that gives us a net expenses here of $3,650. And so again, we add up our qualified expenses and we subtract out the scholarships, and that gives us the amount we can claim for the American Opportunity credit, in this case for Carla. And so now we just have to enter the institution's name, and so it's Yuma College. Enter that. And so now it is at 10 College, 10 College Avenue, 97401, we'll go 3, stay consistent. Eugene, Oregon, did you receive? Yes. Receive form 1098-T. Student received form 1098-T from this institution with box 2 filled in. We don't have any information on that, I don't think. This one includes an academic. Yeah, we don't have any info on that. So it's going to be a no here from us for that one. Enter the institution's federal identification number. There it is. Okay, so 377001234. Nope, we haven't claimed that. Yes, the student was enrolled at least half time. No, we know it from the interview. No, they weren't convicted of possession of a controlled substance. Are you eligible for a refundable portion of the American Opportunity Credit? Answer no if 1, 2, or 3 apply to you. You were under the age of 18 at the end of the year. No, they were lower than that. Or age 18 at the end of the year and your earned income credit. No, a full-time student over the age of 18 at the end of the year and your earned income was less than 1/2 of your support to our knowledge, she does not have any earned income. And so we would say no, because she was a full-time student over the age of 18 and under 24 at the end of the year, and her earned income was less than 1/2 of her support. Because again, to the best of our knowledge, she has no earned income, and so it was obviously less than 1/2 of her support. And so it will not be refundable, this portion of it. See here, we've entered that. We're just going to go ahead and click continue and come back here. And so we see now that we've got that taken care of because it was on the W-2. And now we've got that taken care of here because it was on the 1098-T. So now what we're going to go ahead and do is we're going to enter the child or dependent care expenses. So we're going to come down here to where we had that information. We see that that amount is $2,500. And so now we are going to look here for the child and dependent care credit. Yeah, here we go. Child care credit, because it's for a qualifying child here. And so we're going to go ahead and add a child care provider. And so this is going to be for their, okay, yeah. So there we go. So this is for Busy Bee Daycare, and we see that their EIN is this right here, and that's something that you need to enter this information. Yeah, and so we see, that's Busy Bee Daycare. It's going to auto-populate that. And then we are going to come down here. We'll fix the zip code to Eugene. And then now we're just going to enter the amount that we paid for childcare. And so $2,500 was put towards childcare. So we enter that. And now we have to provide a phone number. And so that phone number matches there. And so we see here we've entered their identifying number right there. We've entered the name. We've entered their address, the zip code, yada, yada, yada. And we enter the amount that we actually paid to the provider. And so we are done with that as well. So now we have to mark which dependent it's for. So yes, Holly is the dependent. And then here for step 3, it says enter the information and qualifying expenses paid for qualifying persons not listed in step 2. And so because Ollie was a dependent, he is listed right here. And so we do not need to go ahead and add someone in step 3 right here. But what we do need to do here for Ollie is go in and enter this to make sure that we attribute who the expenses were paid to correctly. We are 2,500 there again. So we see here that the total expenses is 2,500. The total amount paid to providers 2,500. The difference is 0. That's what we like to see. We continue to page 2. So that they could work for this credit to calculate the taxpayer and the spouse if applicable must each have earned income. Figure out how many months you were a student and did not work. Okay, wait. So what was this page 4? So the credit for dependent care expenses is for individuals who paid for child care so that they could work. First credit calculate. First credit tax for spouse must each have earned income. There are exceptions to the rule for disabled or full-time students who are unable to work. Complete the addition income section below for the appropriate non-working spouse for the purpose of calculating this credit only. And so we don't have any of these that would be involved here, besides, yes, that they are considered unmarried because there was no additional income here, really. There was no benefits because we didn't have anything from the W-2 because it says don't enter that there. And so, yeah, they're considered unmarried for the purpose of this credit. And so we come back here now and we go to our expenses item there. And so we come back here and now we're going to go ahead and look at educator expenses. And so we remember from the interview, educator expenses were, she spent $350. And so I'm just going to go through here, click continue again. And here, I'm actually going to go backwards here. And the reason for that is because I didn't want it to take me further down the menu because I have to come here and do an adjustment in here for educator expenses. So that's one time where I am going to hit that. You see here the educator expenses is limited to $250. She paid $350, but the max there is $250, and we know that books and supplies qualify from our lectures, so we are good to go for that one. Okay, and so then if we come back here, we see that we've entered the contribution retirement accounts from the W-2. We entered the 1098-T information. We entered the child independent care expenses such as daycare, and we entered the supplies for educator expenses. So we're done with the expenses section. We're done with the income section. And so we are coming down the home stretch here, and we're going to get into the life events now. And so have a credit card or mortgage debt canceled / forgiven by a lender, or have a home foreclosure. That was a yes. We know it's the cancellation of debt, and we have already entered that. And so we are good on that one. As I've talked about before, with TaxSlayer, it's going to help us with the earned income credit. And so we do not need to worry about that right now. But we do need to enter the health coverage through the marketplace. And so I'm going to come back here, and I'm just going to go ahead. I'm going to click through the deduction section here. None of these apply. These are some of the more random taxes that we talked about previously in the lectures. None of this applies. None of this applies. None of this applies, but these items are going to come up probably relatively commonly this year, so be sure to pay attention to this page. And now we're actually going to go ahead and calculate the return. First here, we wait for it to load. Very exhilarating. Now that we have finished loading this up, we are going to go ahead and click yes here to get started on the health insurance portion of the return. And so now we're going to come through here, and you see all of them are entered in here already. And so again, if you wanted to add someone, you would go ahead and do it through this, and you would add the household member this way. And so we're just going to go ahead and click continue. And no, Jennifer was not eligible to receive unemployment for any part of 2021. And so this, since it never told us anything about APTC, we're going to click no, because the advanced payments here, really, it just shows it here from us on this side, the advance payments of the premium tax credits. But it says, are you required to repay all of it? In most cases, the answer is no. Only answer yes if you were not considered lawfully present in the U.S. or you meet health coverage tax criteria. No, we will automatically calculate for repayment of a PTC when MAGI is greater than 400% of the federal poverty line. So, no, that does not apply. Do all forms 1095 include coverage for January through December with no changes in the monthly amounts? That is a yes right there, because we see all of these amounts are exactly the same. Please enter your annual premium tax credit information. And so here, we're going to go ahead and take the premium amount from here. That is the monthly amount. Here we go. Okay. So here is the total. Here we go. We have all of those down there as well for the different sections here. And so we're going to go here. It's going to literally spell it out for us. 1095-A, line 33A. So boom, that's the number right there. So we're going to enter 5430.96. So now we're going to go to 33B right here again, 4500. Enter that there. 1500 there at the end. Pretty sure I clicked there very quick. Yes, 1500. 1500. And so there we go. And we're just going to click continue. And so you see here, it's going to ask stuff, depends modified AGI. If it's a filing requirement, it's not a filing requirement. We're going to click continue. So the federal return is complete. There's going to be information here in future videos on how to do the state return and some details around that, because that is evolving somewhat as we go here. But what we're going to just go ahead and do is we're going to continue to the summary. And the summary here is where you can actually go ahead and view the tax return that you just completed. So we completed this return here, and you can see this is what an actual printed out tax return looks like. And you can view all of the work that you just did here. So you see here, all of the information that I have entered is in this form here. And you can scroll through this if you so choose and look at all of the different pages here. Yeah, and it'll give you a lot of different information. You can also look at it from the summary view here, which can also be nice to look at as well. And so now we're just going to hit continue. Hello everyone, so I'm back here now after I was finishing the last part of this return here, and I realized that one of the flaws in my ways of doing a 2019 return here for 2021 is that there were some details that they wanted that were not on the 2019 items, and so you'll see that the number here on the right has changed a little bit. So I'm just going to go ahead and save some of the stuff with regard to state returns and some of the stuff that I entered to make all of this work out the way it's supposed to here nicely, because to be honest, it's kind of made up because it's not in the information 2019. But the good news is that for everyone here, this is really all you're going to need to answer the questions on the advanced exam. So I'm pretty comfortable leaving it where it is right now, just having you be able to see this form. And I'll go ahead and put up another video some other time talking about the state section and how to finish off the end of it. And those two are really not very complicated topics, so I won't imagine that'll be too big of an issue for anyone. And so, again, as always, thank you for watching, and feel free to shoot me any questions that you may have. Thank you.